Welcome to Swing Trading with Cycles channel. We're going to do an update on natural gas today. We have reviewed natural gas along with crude oil, but we haven't done it by itself yet. So this will be our first video dedicated to just natural gas itself. And I'm using currency.com as the data provider within TradingView, just FYI. So this right here, right, currency.com. It's the CFDs, so not the futures, but should be fairly correlated with the price. And you can see on the yearly chart, so each candle being one full year of price action. This goes back to 1990. So that's your 1990 candle. Now, the first thing that should jump out to you, or jumps out to me, I should say, is these upper wicks, man. Like, look at them. Like, not all years, but you have many years where you have these big upper wicks, like this year, like this year, like this year, right? This was 2000. Wow, what a big, like, you don't see big full candles like this very often, especially a yearly candle. This is an entire year of price action, 2000. So it's like price just went nothing but up and then closed very near the highs. But this is our year that we stand. So what does that mean for 2023? Now, the high for this candle is $9.97, and the low is $3.60. Let's just draw the lines, right? Boom, and then boom. For some reason, it doesn't go exactly where it needs to, but so that's approximate. But as we're quoting the open, high, low, close up here, so it's a giant range, right? Like a huge range. And so we're obviously going to be an inside candle to start 2023. And so we can draw that just like for, it depends on how we close out the rest of this month. But what we know for sure is, and it's December 7th, by the way, so early December. We know for sure that there's no way we're going to make a new high this month, right? We're not going to go above $9. And we're probably not going to make a new low, right? So we're going to continue within this range for this month. And then next year's candle, the candle that's going to open January is going to start somewhere like this, right? And so the question is, what does it do within this range? Does it stay in the range? Does it break to the upside? Does it break to the downside? That's what we're going to look at the lower time frames for clues. But notice, this isn't the first time we've had an inside candle start the year. We know that 2022 started as an inside candle because of this upper wick from 2021, right? And so just if you pretend that the 2022 candle isn't here, like, we know the candle started like somewhere like right here, right? And obviously this candle broke to the upside because it broke above the high. I'll draw that line just so you can see that, right? The high from 2021 was, what is that? $6.52. So we broke above that. We're now obviously below that now. And not to belabor the point, but you can see 2000 also had an upper wick, right? So 2000 had a high at, what was that? 2020 had a high of $3.43. Now we are above that high, which is actually good to know. And that's going to be an important level that'll probably come into play at some point. But notice, again, 2021 started as an inside candle, right? Like, if we bring this bad boy over, it started like right here somewhere, right? And then at some point it broke above, but then again, you can see it ends up pulling back. So clearly there's a pattern here where you get these vicious pullbacks after making a new high that you need to be aware of. But it tells you that on the yearly level, we're going to be inside. But what does that mean, let's say, for a quarterly chart, right? Like, let's zoom in here. So we are just now making a new low for the quarterly chart. We're about to. So, and notice that these last 3 quarters were more or less consolidation. So this is Q2, this is Q3, and this is Q4, what we're in right now of 2022. And you can see, wow, we had this huge move in Q2 up and then a retracement. And then we had another huge move up in Q3 and then a retracement. Yikes. And so that's the upper wick that you're seeing on that yearly chart, obviously. And now the low from last quarter was $5.33, more or less. And so we're like 10 cents above that. But that's a level you're going to want to watch for, because if we break below that level, that makes this, that makes Jeez, where is that little icon? Wait, where did that go? Right. That makes your Q3 a swing high, right? Because the swing high is what happens when you make a lower low on the chart. Definitely take a look at I have a specific video that talks about swing highs in great detail, but this candle is marking the high right here, the Q2 candle. And so once we go below the low of this candle, that makes this a swing high. And what we would expect is, you think about Q3, going back to that idea of what is 2023 hold. You would expect that 2023 follows to the downside the Q1 2023 candle follows to the downside of the Q4 2022 candle, right? That's what you usually get, right? A big down candle is usually usually continued in that same direction, or maybe you get a consolidation before a further move lower. But notice that would still be inside the yearly range that we talked about. So you could have this continued follow through on the quarterly candle, and it still would just be inside that ginormous range. But you do want to be prepared for downside here, because if you think about this from a long-term cycle perspective, and let's draw this out together really quickly, you can kind of see the cycles ebb and flow. And so first off, let's start. I think it's best to I can see them, but I'll point them out to you so that you can see them clearly. That's a swing low, that's a swing low, that's a swing low, that's a swing low, and we don't have to do all of them. We'll just kind of start. We have a place to start. So this most recent whole cycle here started, so we rallied for 30, interesting. So we rallied for 32 months. That was our top. And then our low was on month 51. So I'll just mark that. And we're not going to do all of these. This is just giving us a ballpark. So that gives you a sense, that's something like a 5-year cycle. And then you have this here, which is 48 months. And that has a top on month, what is that? '22, right? And this cycle has a really early top, right? And that's about 32 months, so that's closer to 3 years. So it doesn't mean everything has to be kind of perfect, like, oh my God, there's a 3-year cycle or this number. But clearly, price moves in these really long time arcs. Now, this has been a downtrend very clearly, right? You got lower highs making lower highs, right? But this is a change in character, making a high above these previous peaks. We're now coming back and retesting that area, which is why you imagine there's going to be some strong reaction to around the 450 area, where we had this kind of situation that price aggregated there. But more importantly, if this rallied for 32 months and this rallied for 22 months, and let's say, how long was this rally? Because sometimes you can just really shorthand, you can just measure the rallies. That is a 22-month rally. Well, that's not a coincidence, right? Or, that is a coincidence, probably. The point there is, it gives you a sense of how long rallies tend to last. And it doesn't mean that everything is going to work the way it has always worked in the past. But so August was month 26. And where was that? Right? Yep, that's right. August was month 26, and that's when we made our high. So it suggests to me that we're moving into a long-term cycle low, in the same way that the broader commodity complex is moving into a long-term cycle low. And definitely take a look at the videos on that, because natural gas is a part of this, obviously, and oil is moving into a long-term cycle low, agriculture, etc. In this case, this was one of the last ones to peak, because it peaked out in August, right? Whereas oil peaked out in March, I believe it was, right? Let's just go to that really quickly. Make this a linear. And oil peaked out in March. So that's a good example, and other things peaked out earlier as well. So if this is month 26, And and that's the thing, we don't, like, it's not like we have some kind of predictable, very regular cycle here. But if we just say that this cycle is going to be, let's just call it the 3-year cycle, because we've seen, there've been, they've been around 3 years before at some point. Like, this is obviously a much longer one at 50, but you could argue that, like, that, and that's the other concept, cycles live within each other. You can kind of argue that, like, this is actually your low here. This is a small cycle at 23, and then we have another rally and another drop. That would actually make a lot of sense, right? And then you have this, like, parabolic top here. So it's like these are two cycles. One is 23 months and one is 27. But the point is, you've made a top on month 26, and you're now declining. And what you want to be watching for, eventually we're going to get a swing low, which is going to signal that we're forming a long-term bottom, and then we'll continue to get follow through on it. Let's look at if we look at the quarterly chart. Yeah, we talked about this. We're about to get a swing high on the quarterly chart. And so you could see a world where we even come down and, like, test this. Like look at this. For 3 quarters, we bounced around this level, right around the 360s. I'd be surprised if we don't get at least all the way down there. Also note that this line here, the blue line is always the 10-period moving average. In this case, it's a quarterly chart, so it's the 10-quarter moving average. So what is that? That's about, like, 4 years, something like that. And so let's zoom into the weekly chart now. So we essentially talked about a long-term cycle, call it anywhere from 3 to 5 years. Now, what is this thing doing on the weekly, right? So you can see that was a major swing low, that was a major drop bottom. That's your top here on what is that? Week 8. And then you have your low on week 17. That's interesting. So that's really interesting, right? So this is a weekly cycle rally of 26 weeks. I'll just move that back. Going up here and then coming down. And then we have a short one of 17 weeks. And now we've started another one, right? And this would be week 1, 2, 3, 4. We would have topped out on week 4. Now, you could interpret this as, no, this is actually still the same as this cycle. Who cares? The point is, this is about to break below this low, which is, by any measure, a failed weekly cycle, because we're also going below this low, which was another weekly cycle. And so, doomsday would be kind of retesting this level here down at the 360, which we just kind of talked about. It won't necessarily happen in a straight line, because we're going to have daily cycles within, but that's what we're setting up for, right? Like, this becomes this is a big lower high here. So again, you could think about this as a daily cycle, a weekly cycle that's very, very left translated, or you can think of this as a short weekly cycle that's very left translated, or a long one that's really left translated, right? Because this topped out on week 8, and then this is week 17 that it made a low. And then if we're just still in the same cycle, that would be week 23, and again, we have a top on week 8. So what you're watching for is a continuation of the lower lows and lower highs, which we're getting, and we actually gapped down this week. That's interesting. Now, to really time, if you're trying to get into a trade, for instance, you want to time this. Now, I talked about this in previous video where we talked about crude oil. We were green for today. Again, this is December 7th, and now we've pulled all the way back. I mean, this is a pretty precipitous drop. So where does that put us in the daily cycle count, right? So this is obviously a daily cycle low right here, right? That's very clear. And so this is a daily cycle that rallied to day 22, and it's now day 32. So that's good. That's a good way to gauge that, like, you would expect a multi-day bounce pretty soon. So not a place where I would be pressing shorts necessarily, because we topped out on week 20 on day 22. Now, the other argument though is that, well, won't this be a left translated daily cycle? So is it going to run for more than 44 days? Because if it's left translated, it means it has to go down for longer than it went up. So that's the other thing that's kind of counting against this. I would say, like, after this kind of huge decline, and what is that percentage terms? Like, you do want to be careful pressing shorts. Now, and the other big catalyst, we know we have the CPI data and FOMC meeting. Yikes, down about 34% in like a couple of weeks, maybe 3 weeks. When was this peak? That was November 23rd. Okay. And notice how far below the 10 period moving average we are. You don't generally get that stretched that far away from a short-term moving average just by definition. And so again, a snapback is to be expected at some point, but that is going to be a selling opportunity almost certainly unless we see something different in real time. The same way that the move up today was a selling opportunity. I mean, to be clear, I want to actually just zero in on this for a second. We had a swing low at one point. Just to be super clear about this, right? Like at one point, this, and it's still trying to be a swing low. See, it's trying to go green again. This was a swing low because we moved above the high from this candle that marks the low. Notice this hasn't made a lower low than this. And so it was trying to form a swing low. So it's maybe even trying to make a daily cycle low today, right? Maybe it rallies back a little bit. We get some consolidation tomorrow, and then it just has a feeble rally. But either way, you would expect it to be a left translated cycle. So I'd be surprised if it rallied for 22 days again, like this one rallied. Although you could say this big rejection was your first clue that this was going to be bearish, right? So that gives us some pretty clear levels here, right? Like we really need to cross above, what was the low from yesterday? Across above $5.65 makes yesterday a swing low, and signals potentially we have our daily cycle low. And again, I expect it'll be a bearish rally, but we'll still probably rally for at least a few days. That's generally how a daily cycle involves. Like you can even see something like this, right? Like look at this little rally: 1, 2, 3, 4, 5 days, and then it gets stamped out, right? Little rally like this. So that's what you want to be kind of on guard for. But again, that's going to be a selling opportunity based on those higher time frames. We're still in weekly cycle decline, and you could say actually pretty early, right? So, we just topped out on the week of November 2021, which also points to a similar kind of situation with some energy names, right? Not necessarily specifically natural gas, but just crude oil, for instance. So that's the lay of the land for natural gas, expecting lower prices going into the beginning of 2023, which again is a theme with broader commodities, which again, you can definitely take a look at the more detailed video that talks about the broader commodity index. But we will leave it at that for this update here. But we'll continue to track this sector and also probably dive into some individual stocks that might be impacted. If you have some ideas for particular stocks that are tied to natural gas, I'd love to hear about them in the comments. We'll see if we can incorporate them into further analysis. But we'll leave it at that for today. Thanks for watching.